Gold and silver had a very good run over the last few weeks. Not all of the other metals have picked up, but also copper has come a little more in the favor of investors, talking about approximately $5 a pound copper here as well. But over the last few days and weeks, we have also seen a little bit of a pullback, and some investors have a little bit of a question mark whether the gold, silver or mining and metal rally is already over. To be fair, there would have been a very small and short bull run, but today with me is Greg Johnson. He is the CEO of Metallic Minerals. He is a very experienced CEO in the mining space and also has a very good analytical background. So I'm very pleased that we have him here. Greg, first of all, thank you very much for your time. I'm really looking forward to talk about the markets and also your current company, Metallic Minerals.
Well, it's great to be back with you.
So, Greg, let's touch base on the current developments of the market. We have seen gold running from basically $2,000 to $4,500 within 18 months approximately, right? And now we've seen a pullback from $4,500 to $4,000, which still looks very good when you zoom out. But when you zoom in, people are always a little bit concerned when you have 10-15% pullback from the high. So first of all, what are your thoughts on the current gold and silver market? And do you see the bull run being over, or is it just getting started?
Yeah, no, it's certainly been an exciting time in the metals markets and for investors, both in the metals, but also in companies related to the metals. Yes, it's been a big move here, certainly. Gold has been the leader, which is similar to past cycles where we saw gold move first in the last cycle, which bottomed in 1999, 2001. We saw gold move first. We saw silver catch up later, and then we saw copper and the other metals click in. And this pattern is looking very similar here, where we've seen gold as the leader. We've seen a series of periods where we have a run and then a consolidation period, anywhere from a month to several months, where it's kind of sideways action, where we work off that kind of overbought character, where the market's just gone up, quite rapidly. Been very constructive to see these sideways moves in gold and then a breakout to new highs. We've seen really very recently silver join the party. It's hit that and gone slightly above that all-time nominal high, not inflation adjusted, of $50 that was hit back in 2011. And believe it or not, all the way back in 1981, it hit the same price. So in today's dollars, that 1981 high is probably almost $200 an ounce. So we have a long ways to go on an inflation adjusted basis, but getting through that 50 and seeing silver catch up and start to match gold, I think is very positive. On a gold to silver ratio basis, a lot of analysts track this closely, and silver is still very inexpensive relative to gold. We're at about a ratio of about 80. It's been as high as 110, which is very extreme, like one of the highest silver to gold ratios in the last 50 years. This recent move in silver has got it to 80. The long-term mean is closer to 60. This is what we would call a mean reverting series, where they tend to cycle to highs and then through the mean and then to lows. And the low end would be around 20. You say, what does a 60 look like? And that certainly pushes you towards $75 or $100 silver at today's gold price. And, where could it really go? Well, if you were to look at a 20-to-1 ratio, you could be looking at $200 silver. So, I think, this was a consolidation that's healthy and is positive for the market, because when things get this overbought, they need to correct. And on the daily charts, we're now down to oversold. And so it looks like, this has been healthy. We haven't attacked any of the uptrend lines. They all remain in place. Most metals bounced off of their 50-day moving averages. The classic definition of a bull market is that your metal or your stock is trending above its 200-day moving average, with the 200-day acting as key support. And often in these interim rallies, the 50-day acts as key support. And so everything indicates the fundamentals that have been driving gold, silver, and here very recently, copper price has, as in the last cycle, it started to to hit the top of a 20-year price cap. This $5 a pound level has been hit multiple times over the last 20 years. We saw a brief move higher in the US market due to kind of tariff kind of noise and uncertainty. But on the international market in London, copper has broken above that $5 level. It looks a lot on the chart like the gold chart, where we've had this consolidation. And in the last cycle in 2003, after hitting a 20-year high multiple times, it broke out and had a huge run from $1.50, which had been the previous cap for copper, to $4.55. And so we may be seeing a resetting of the copper price trading range here soon. With a decisive breakout, copper could become just as exciting as silver and gold have been here in recent weeks.
Greg, thank you very much for outlining that. And I think what is really important here to understand for investors, obviously we don't give investment advice, but we are seeing now gold being pendling in at $4,000 approximately. Silver is just below $50, and it seems like we're building a new foundation here. We need a little bit of more time. We need a little bit more of a break, and then the bulls can come back with power, and that looks really good to me. And this is just an addition to what you just said. But let's have to switch to copper. You already started on the copper side of things, but I think it's a really interesting sector here because we see a couple of things. First of all, copper is a critical minerals listed in the US, right? The second thing is now a lot of companies are committing to spending money on mining outside of China, being independent of China, and especially Donald Trump is looking for assets in the US. Obviously, you are an expert on that because you are exploring an US asset-based copper project. So give us a little bit of more insight on the market, on the US market. We have seen antimony stocks going skyrocketing. We have also seen that with other critical materials. Is copper the next big thing, especially copper companies in the US?
Yeah, no, it's a really good point. The whole critical minerals space has really seen amazing new interest. This was an area that most of the market just didn't follow until very recently. Copper, I think, because its price hasn't been particularly noteworthy, it's been within its trading range, has not necessarily stood out, but it has the same challenges that many of these other, there are very few large-scale copper. And in fact, in the industry, we're talking about a discovery drought. The number of discoveries this decade is far lower than past decades, even though there was a relatively healthy exploration budget in the last cycle for copper. And this is because many of these deposits, all the easy ones to find sticking out of the ground, have kind of been found. And so, companies are having to look deeper at hidden targets. In fact, we're seeing, particularly in the copper space, most of the big discoveries that we're seeing are deep discoveries, which are more expensive and harder to find. And so it's setting up a situation where metal prices are moving higher because they are signaling that supply demand is out of balance. And I think one of the things people immediately assume is, oh, it must all be higher demand. But I believe in this market, it's a combination of, yes, every year, population growth, industrialization, onshoring, all the things we need, data centers and other things to support, the build out of energy transition and data centers, all demand more copper. And they're expecting we may need to produce as much as twice as much as today by the 2030s, 2040s. And so that's going to be a challenge for the industry. But the reality is with this lack of discovery, we've got a supply side constraint. And because it takes 10 to 15 years to go from initial discovery to production, it creates a lag that even if with higher prices and with money flowing into exploration, new discoveries will take time to move. And this is likely to create a longer and stronger commodity cycle due to this lack of discovery. And really the fact that we've just come through a 15-year bear market for the juniors, which, as you know, as we've discussed in the past, we've seen in the last 2 decades a transition very similar to pharmaceutical biotech in the mining space, where the big mining companies are great at building and operating mines, but it's the juniors that do all the early stage, mid stage, advanced stage exploration, with the big companies then wanting to come in after these have been kind of de-risked, but before they go into production to buy them out. And that model means we're relying on the capital markets to fund exploration. and you don't get a lot of funding in a 15-year bear market. And so this is really a perfect setup for higher prices and sustained higher prices.
Yes, and I think what's interesting here, Greg, is if we have a look at Newmont Mining, right, they have a really good last quarter in terms of production and money that they made, especially at these gold prices, but the stock went down. Why was it? Because they sold a lot of assets. Their production guidance for the future doesn't seem to be that good because obviously they sold some of the smaller mines. But now these type of companies, they have to act. They have to do something. And what they usually do is to increase production again, is go out, buy new mines. Because M&A activities is what makes companies like this grow. And looking at metallic minerals, which is your company, and now we do the switch to that, and I think that's interesting. First of all, Newmont is invested into metallic minerals already. But that has not always been the case. Newmont invested at a 40-cent level a couple of years ago. But when we look back a little bit further, metallic minerals is some of those examples why we are in the mining and metal space, because in 2020, 2021, you went from 15 cents to $1.50 within, what was it, 6 months, I guess? Now, we have seen after a strong party, we have seen the headache, right, afterwards. And metallic has obviously, as a whole industry, come down. But now we're on it seems like an attractive level again. You're between 30 and 40 cents, so even below the initial Newmont investment. So give us an idea here for the future. I mean, why did Newmont invest? And what could be the potential for the future? Because a company like Newmont says we want to have tier one assets. So they have to be attracted to you for some reason.
Absolutely. No, it's a really good point. I think what we're seeing is the market is reflecting the fact that these mining companies are making more money on their mines. So I think earnings statements coming out here soon are going to be very positive. But valuations have come up a lot in the large caps and the mid cap producers. They're starting to be similar or even higher than last cycle prices. Where is the real value today? It's in the juniors, which would have to rise 3 or 4 times to get back to their last cycle highs. And keep in mind, last cycle highs, gold was $1,000 to $1,900 an ounce, not $3,000-$4,000 an ounce. So I think there's a lot more room to go. There's a lot of leverage. Specifically with metallic minerals, we've got 2 key assets: the La Plata asset, which is the focus of Newmont's investment in southwestern Colorado. We drilled a discovery hole that was 816 meters of continuous mineralization starting at surface. And that hole ended in spectacular grades, almost 5% copper with over 10 grams platinum, palladium, and gold. That attracted the interest originally of a company called Newcrest, which was an Australian mid-tier copper gold producer. Within 2 months of them taking the investment in metallic minerals because of the similarity of that discovery hole with their world-class copper gold deposit called Cadia in Australia, Newmont Mining buys out Newcrest for $15 billion because of that copper gold portfolio. So the great news for metallic minerals has been that team we were working with at Newcrest moved over to become the copper gold team at Newmont. We're still working with a lot of the same guys, and Newmont has an objective, I understand it, to get to 25% of cash flow from copper, so to bring in that copper component. And so they're looking for copper precious metal assets like La Plata that have the potential to be tier one. In other words, top 10 or top 20 in the world. And the similarity that they see in La Plata is geologically, it is very similar to that Cadia mine in Australia, which is a top 5 copper gold producer globally. And in fact, the team at Newmont has pointed out the alteration that we can see at surface. In other words, the signature that we can see expressed in our mapping, our sampling, our geophysics is twice as large as the footprint size at Cadia. And so the suggestion that we've got an initial discovery that's still growing, still open at Allard, that's our resource area, 1.2 billion pounds, almost 18 million ounces there, wide open, but almost a dozen other targets that remain to be tested. We've advanced 3 of those to a drill-ready stage, and that's an important objective for our upcoming drill programs, is to get the first drill holes in those. In this kind of porphyry-related system, typically we don't see just one deposit. We would tend to see multiples, and because of the size of the district, that's really, I think, what we see and the potential that the team at Newmont sees.
Very good, Greg. Thank you very much. And I think one other thing that I didn't mention in the beginning, but we can touch on that as well. In the last cycle, when I said earlier you went to $1.50, I think that was just based on your silver project, right? You haven't had La Plata by then at this stage. Plus, silver has been in the hype by then by touching $30 for the first time for many, many years. Now we're talking currently at $48, $49 silver. So give us also an idea of the silver project, because it seems like Metallic has been communicating on the copper, which is obviously your main focus, but you still have the silver asset, which was in the hype in 2020 and 2021. Give us a little bit of an idea what's the potential there.
Absolutely. The Keno Silver Project was the foundation of Metallic Minerals' start, and it really stands out as one of the top silver projects in the US and Canada. There's a real scarcity of quality silver projects. We tabled our first resource of 18 million ounces last year. That's in 4 separate deposits that are potentially open pittable. And this is next door to Hecla's highest grade silver mine and Canada's largest silver producer in the Keno Hill Silver District. So the opportunity here is really tremendous. We have the other half of the Keno Hill Silver District. Hecla now calls this a core asset, so it's really become a very important growth mine for them, and it's their highest grade, producer. And so the opportunity here is for us to continue to grow those resources. We've got a huge land package, 177 square kilometers, 4 resource areas, and over 20 advanced stage targets. So similar as I discussed at La Plata, we have the same setup at Keno. And so our objective is to keep drilling and growing the resource at Keno Silver, and to add additional targets to that drill platform. And we believe over time we have the potential to get to 50 or 100 million ounces, which would put us in the top development assets in the US or Canada for silver.
That sounds very good, Greg. And I think here is real growth potential for the investors. And I think also, before I forget it at the end, I have a conflict of interest, right? I'm invested in the company, my company is invested, and we are working together for communicating in the German-speaking markets. I think that's important to outline here. But we should also talk about the upcoming potential for existing shareholders, but also for people that want to become a shareholder in the future. For 2026, I think you have big plans, not just on your copper asset, also on the silver asset, but also maybe we can just talk briefly about alluvial gold assets that you own, because that could also be like a cash flow driver for the future, which is quite an unusual situation for an exploration company to have also a cash flow driver. So give us an idea for the future, what boxes have to be ticked to really get Metallic Minerals into a new company in 2026?
Absolutely. I think 2026 is shaping up to be one of the most exciting years in the company's history, not only because I think we're going to continue to see higher metal prices in our key metals, being copper and silver. We also have exposure to gold, platinum, palladium, and other critical minerals. At La Plata, we include rare earths in that exposure. So it's going to be an exciting year. Drill programs planned for La Plata, Keno, as we talked about, on those exciting targets for resource growth as well, new discoveries. And this was our 3rd year of production on our alluvial royalty portfolio in the Yukon, that famous Klondike gold district that produced over 20 million ounces of gold historically. Well, we're one of the largest holders of placer or alluvial claims in the Yukon. It's our 3rd year of operations, and this was our largest year yet in terms of production. Next year, we hope to have, this year we have 2 operators. We hope to add additional operators and continue to grow that. But as you said, it's very unusual to have cash flow and gold and silver production in a junior explorer, but we're building just that kind of situation in Metallic Minerals, and hoping for our next year to be even our strongest year ever in terms of the gold production from those royalties.
That sounds very good. Greg, so to summarize at the end, you think we're going to see higher metal prices, and you outlined it very well at the beginning of the interview, especially gold, silver, copper. You also think you're going to have a very good year and a very good future for the exploration on your key assets, and you also think that you might have more income from the gold royalty that you just pointed out. Is there anything else people should know at this point of time for Metallic Minerals?
I think the thing I would probably leave people with is this recent market correction in the metals is being reflected also in the mining industry valuations. I think that we are going to see higher prices. These things don't move straight up; they move in waves. This is becoming a buy the dips type of market, and so in this kind of correction, this is giving you an opportunity to get in on those names without chasing prices. So great time to be looking at high quality names. I would recommend people, if they're looking at the development stage, where I really think that's the most leverage right now in terms of values. I think people want to focus on companies with high quality resources that are significant, much higher risk if you're looking at pre-resource stage names, and particularly in metals like silver, gold, and copper. And metallic minerals really stands out in that way in terms of having two high quality resources, copper, silver, in the US, and one of the in the Keno Silver District with that silver resource next to Hecla in Canada.
Very good. Greg, thank you very much for your time and outlining all of this. It's a very exciting time for our mining and metal industry, and I'm really looking forward to talking to you again in the future and see the developments of metallic minerals. Good luck for your upcoming exploration program, and talk to you soon.
Thanks a lot. Look forward to keeping you updated.